Payday loans with short-term, extremely high interest rates have long been the target of consumer advocate groups. Now, the California Department of Corporations has issued a strong warning against payday lending on the internet. According to research by Pew Charitable Trust, 11% of payday borrowers earn between $15,000 and $25,000 a year, but just 5% of those who earn between $40,000 and $50,000 a year annually have used a payday loan. Here to talk about consumer spending habits and the impact of payday loans on the folks who use them and the economy is Miro Copic, a marketing professor at the SDSU School of Business. Thanks so much for joining me.
Thank you.
Payday loans advertise they're for emergencies, for come and get this money quick, we'll put $10,000 in your bank, at least the ones I've seen on television. But the research shows that these borrowers are using the money for everyday things, paying their rent, their utilities, things like that. What does that tell you?
Well, that tells me that consumers, there's a permanent underclass being developed, consumer underclass that's focused on the underemployed. One of the biggest issues most recently over the last 5 years has been the number of underemployed in the economy, and they have a more optimistic expectation that their employment will be full and that using payday loans could be a bridge to their next step in improving their situation.
So it may not improve their situation, but some may argue, but isn't it helping the economy because they're giving all this money back to the economy? Does it help the economy?
No, it doesn't, because what it does is it basically maintains a lifestyle. Now, they can certainly cut back certain things, and that would reduce the amount of spending in the economy, but there's greater savings. The bigger issue is it depends on what they're spending it for, but it's the additional expenditures, clothes, back to school items, appliances. Those are the things that obviously these people cannot afford if 7 out of 10 are spending it for their daily or monthly expenses.
Necessities, essentially.
Absolutely.
Now, Pew researchers also found that many of these borrowers actually don't have full-time jobs. 10% are unemployed and 12% are disabled, meaning they're actually borrowing against government disability checks. That's discouraging to me, to say the least. Is it legal?
There's nothing illegal about it. It's the terms that they're borrowing under that can invite scrutiny. But basically what it's saying is that the government benefits are not enough to live on. So these people have to kind of fill the gap in between their government payments to be able to make their lifestyle payments to different entities.
And it snowballs, the financial loss. The Centers for Responsible Lending says California payday borrowers lose more than $450 million each year due to extreme fees on their loan. Explain why that is, why it's so much, why we're looking at 459% rates or things like that just seem absurd. Is it because people don't know?
It's very interesting. There's a truth in lending clause that requires these payday lenders to tell consumers how much total interest they're spending. So to give you a perspective, if you're going to do a cash advance on your credit card, most cash advances are between 23 to 25%. The average payday loan, they base it based on every $100 of borrowing. So if I'm going to borrow $100, I'm going to spend between $15 and $20 in interest, which equates to roughly a 400% annual interest payment. If people really understand that concept, they may elect not to do a payday loan. They may elect not to make certain expenditures. They may borrow from friends and family. They may go to a pawn shop and sell something to make those payments.
I want to briefly touch on payday lending on the internet. This alert was really targeted toward that, saying that they don't fall under these regulations or these rules or these disclosures. What is your advice to people as far as who may want to get a payday loan? Should they go to the internet? What other options are available?
I mean, if they're looking at payday loans, the vast majority of people using payday loans are going to the storefronts, to moneytree.com or Advance America. They try very hard to present a fairly clear and direct reply to consumers. The issue with online payday loans is that it depends on the source. Theoretically, they're supposed to say what the annual percentage rate is. The issue is that some of them skirt state laws, and so those, a lot of times, younger consumers are more likely to use online lending, but it's the other consumers who are not really knowledgeable about online that they could be
kind of persuade. Let me ask you this: if you had to say two things, maybe avoid internet. What would be your two sort of, if you're gonna have to do a payday loan, what should you do to protect yourself?
If I'm going to do a payday loan, I'd rather go to a reputable payday loan company at their storefront. If I'm going to do something online, I would research and maybe use that company's online option. So say moneytree.com or advanceamerica.com. Those would be the ones at least I would target. They deal more reputably with consumers. The other ones, what they'll do is sometimes they'll sell consumer data to a lot of other entities, and so you may get calls about loans from other people that you never even thought that you were providing the information to.
All right, I wish we could talk more. We're out of time. There is more information about this on our website. Miro, thank you so much for talking with us.
Thanks, Peggy.